fixed income markets today are very difficult because there is a conundrum.
So we're back once again for the bulls versus the bears debate. So starting with the macro US and the Federal Reserve, Annie, what's your insights at the moment?
Okay, I mean, since the beginning of the year, the US economy has been a bit disappointing in terms of data releases, except for the employment report. The GDP growth is expecting this year to be around 2%, when at the beginning of the year, consensus was expecting growth to be 2.5%, so it has been revised downwards. However, we still are of the view that the economy will do quite well this year and might be revised higher later on.
So you're optimistic,
Yeah.
Eric? Are you optimistic?
Yes, the picture is still unclear, but economic data in the US are better. Unemployment is still a big question mark because it's around 5% now, but keep in mind that calculated with the European standards, it's still above 10%. So if you want to compare with Europe, the unemployment rate in the US is still the same as in France, for example. So it's still a big question mark. But regarding inflation will pick up a little bit because there will be a base effect between the core inflation and the headline CPI. So we think that inflation will increase gradually this year. It's not a big problem, but it will increase gradually.
That is why we expect the Fed to tighten its monetary policy. We think it's going to be on the agenda this year. When you look at Fed fund futures, they're not pricing any rate hikes, but we do believe that there will be rate hikes. I don't know what you believe, Eric, but this is our view.
Yeah, there's still a big difference between the Fed view and the market's view. I think that the Fed, they are still in wait-and-see mode because the US economic data deserve a rate hike. The problem is that they still don't know what would be the impact of a slowdown in China and on the US economy. So they are waiting for better news in emerging markets, in China in particular, and the problem of potential renminbi devaluation. But once they have a better view on the situation in China, they will do something.
And in regards to the dollar, taking a look at that, do you see it continuing to strengthen?
He was right on that. Surprisingly, he's right. But I mean, we almost hit his target of 115, his personal target. We do believe that it will rally versus the euro at 105 because we still believe that the fundamentals of the US economy are stronger than in Europe, although we are not negative on the European economy.
And that's what I was going to ask, is taking a look at, last time you spoke, it was before the big ECB day. So yeah. What's your outlook on the ECB?
Yeah, I think the economy is not doing so bad. After all, the household in Europe are enjoying cheap oil prices, so that is helping. Consumption is not that bad. Exports are doing quite well. The ECB has delivered. Our friend Mr. Draghi, and Eric, you talked about the Draghi put last time. I think we were both right on that. They delivered massively. They increased their purchasing program to 80 billion a month. That's huge. And they cut the deposit rate further into negative territory to minus 40 basis points. We think they are done, the ECB. But
I think that I'm a bit surprised because for me the most important event was the implementation of a new TLTRO, because I think that reducing the deposit rate to minus 0.40 or increasing the QE without the TLTRO would have been a big mistake, a Japanese mistake, doing like the BOJ in Japan. And everybody knows now that the solution is not a good solution. In Japan, the QE doesn't provide good results. TLTRO, I think it is the cement that put all the bricks together. And it is very interesting, very important. And Mario Draghi, finally, he did the job. There is no limit, and that's why we experienced a fantastic rally in corporate spreads. Maybe we could have a small decrease of oil prices, and it would be a buying opportunity in some risky assets.
Sure. And you can definitely describe the fixed income market as being challenging in 2016. So do you both have any particular trades and areas that people can look out for?
Yeah, of course. We have two top trade ideas. The first one would be to recommend investors buying TIPS, Treasury Inflation Protected Securities. So that offers you its government bonds. So you have the quality of government bonds. And at the same time, it offers you compensation to inflation because, as Eric said, we expect inflation because of base effect to pick up. Also, oil prices have stabilized and is rebounding. So we recommend investors to buy TIPS. And the second idea is also in order to benefit from the massive purchase program that Mr. Draghi announced. He said that he will also be buying, the ECB will be buying corporate bonds. So why not buying some corporate bonds where you have a state stake, like for instance EDF. So we're a bit more on the beta side. So we prefer like hybrids corporate bonds, a bit more volatile, perpetual bonds with a call. Let's say EDF or a company like Air France, in order to play a little bit this theme.
And Eric, what do you think?
Yeah, I agree with Annie because we bought we bought massively TIPS in January, so we made already a lot of money with TIPS. I think it's still a good idea because, as I said before, the inflation in the US will increase. It's not our central scenario, but the market will follow TIPS and will buy TIPS. So fixed income markets today are very difficult because there is a conundrum. If you want to keep good liquidity, good quality, and decent yield, in our opinion, there is one solution: is emerging markets, but only high-quality emerging markets. So I would invest in very high-quality emerging market bonds in order to take advantage of the increase of oil prices, the stabilization of some emerging market currencies, and there are decent yield. Because the problem today is the conundrum, the equation, trying to solve the equation, liquidity, quality, and decent yield, where $8 trillion of bonds offer today negative yields. It's amazing.
Absolutely. Well, Eric, Annie, thank you so much for coming in today and sharing your insights once again.
Thank you, Jessica.
Thank you very much.
Well, that's all from us three here, but if you like this video, like and comment on Dukascopy.tv. Goodbye for now.